Welcome to the Market Enthusiast podcast, where Good Life's Noah Brooks, Chief Market Strategist, and Chris Needs, Senior Research Analyst, break down today's topics, covering their impact on the economy and personal finance in a fun, easy-to-understand way for investors of all levels.
Welcome to the Market Enthusiast. I'm Noah Brooks, and obviously, this is Chris Needs.
Hello. Happy Fed Day, everyone.
Happy Fed Day. Yeah, we're recording. It is Wednesday afternoon, and the Federal Reserve came out today, and they made major changes to the interest rate policy, right?
Nope.
Nope.
Stood pat.
Yeah, so no change today. 5 or 6 months of no changes whatsoever. A very, very short statement by the Federal Reserve. I think it was probably the shortest in the last, 10 years or so. So a lot going on. We'll get into that. S&P is up about 8.5% for the year. It's down about 2% since we were in here last time, Chris, recording. That doesn't feel great, but down 2%, and I think we're about 3.5% off all-time highs. So not really anything to worry about, right?
Right. We were talking earlier, like there's some crazy names with huge drawdowns. You have Oracle, Coinbase, SanDisk, Nike, ServiceNow, Western Dig, Netflix, Palantir, Robinhood, Tesla, all down, having all of those are 40% drawdowns at least. And market's only down about 3% in terms of recently. Not too bad. Off of all-time highs.
Off of all-time highs.
Not bad.
Not too bad. And that shows up, growth and value. We always talk about growth and value here. Growth is actually down for the year, right? So Mag 7, we know they're kind of, some of them are getting trounced.
Apple's the only one beating the index right now.
Yeah, which is great, right? It's a big holding. It's almost
now the biggest holding. It surpassed Nvidia again. So happy Apple Day, maybe we should be saying.
Okay,
yeah.
What, over $5 trillion today?
Yeah,
in market capitalization. And what you're seeing here is we said Russell 1000 growth down for the year. Russell 1000 value up 20% for the year. So what a delta. We've been talking about a rotation here for, it seems like, since we started this podcast years ago, but we've really been talking about it in the last year or so. In the last 6 or 7 months, it has come to fruition.
Mm-hmm.
International, obviously, doing significantly better than the S&P 500, even though emerging markets have gotten walloped in July, down about 10%, still up close to 14 or 15% as we're standing here. Developed markets up 10%. Mid caps and small caps, yeah, boy, they are the standout. Small caps up over 20%, mid caps up over 15%. And those big names, those large cap companies, kind of want.
Yeah, I'm not sure if we talked about it on the last podcast. Obviously, we're about to be through July here, but through the first half of the year, small caps outperformed large caps by 12% over the first 6 months. So that was the highest delta between those two. Highest outperform. Let me take that back. Highest outperformance by small caps in the first half since 2001.
Yeah. Would love to see that continue, the remainder of the year. I hope it doesn't come back. It feels like you had said earlier, every July, there's this like mini rotation where people unload technology and value starts outperforming. That didn't just happen in July. That's been happening all year. But every year we're like, okay, here comes the value side of it. And it never materializes.
Yeah, it would seem like 23, 24, 25, it would seem like maybe a month and a half. You'd have value outperforming. We're like, oh, finally, this makes sense. Value is going to catch up, going to converge a little bit on valuations. And then by mid-August, it seemed like, growth's coming back a little bit. And then it would just run up through the end of the year.
Yeah. Well, you have this scenario here where everybody's concerned. There's really like 4 things going on, the 4 big narratives now. You have Iran, and therein lies oil prices, Federal Reserve and interest rates, and then the AI CapEx spend. And it seems to me with all of these large companies, Google announced last week in their earnings that they were going to spend up to $200 billion for 12 months on capital expenditures.
Market didn't like that, did it?
No, not really. Not really. So you have these big guys spending enormous amounts of capital to win or to stay in this AI race. But it seems like the rest of the companies out there are actually starting to take advantage of artificial intelligence, and the market is starting to notice that. And maybe that's why we have that disparity between AI companies being down. You just mentioned a whole list of them that were down more than 40%, and a lot of other companies that are non-tech, non-AI related, but are receiving the benefits of implementing artificial intelligence. And certainly the profitability is increasing. Their margins are increasing.
Yeah, I don't think it's an accident that Apple, despite doing absolutely nothing exciting, is the leading returner of the Mag 7 this year, because they have not made CapEx investments into AI, and they haven't damaged their free cash flow the way that the others have. And we talked last podcast about, the semiconductor stocks versus the hyperscalers and how they've gone completely different directions because they're basically swapping cash flows. And it's just something that makes sense if you think about it. If you're going to go near free cash flow flat and you're going to destroy all your free cash flow, which a lot of people model valuations on, that you're going to get hit on that. I'm not surprised when you're seeing these more responsible companies that are not taking their free cash flow down, succeeding. We were talking about a product that strictly gauges investments and grades them on their free cash flow, and how that's performing year to date versus the hyperscalers and Mag 7 types.
Yeah. Well, I'm not an Apple guy, you know that, but I am still waiting for the Apple Car to come out.
Yeah. Aren't we all?
They put the kibosh on that a few years ago, and it's probably good that they did that. One thing that I did read, and not specifically to Apple, but to the cell phone companies, the European Union has passed a law. It's not just recently, but it's coming into effect here in February of 2027. So like 7-8 months from now, that all cell phones, all new phones sold in the European Union after that have to have a consumer replaceable battery, meaning me, the consumer, has to be able to replace the battery with simple tools, non-technical tools, like a screwdriver or Allen wrench, hex screw, something like that. What's that do for Apple's upgrade cycle?
Oh, I'm not surprised that the European Union would do that.
No, they're heavy regulators.
Yeah,
right.
Yeah,
but come on,
very interesting. I like it as a consumer. You've got like that, right? For sure.
I mean, how many?
It's like a right to fix thing. Yeah. Like you're dealing with was it John Deere or one of those companies that didn't allow people to fix it. Yeah. And now this is sort of along that lines of you can fix your own phone. You can extend. Like I wouldn't get a new iPhone if it weren't for the battery going.
In the last, 15 years, I probably would have bought half the phones that I did had it not been for the battery.
Mm-hmm.
And if you're able to go out and buy a new battery, knows what the cost is, but buy a new battery and replace it yourself, that extends that phone years, in my opinion. 2 to 3 years it extends it. Unless you're like hyper new, I need the newest tech, the newest AI, the newest camera.
You're a spec nerd.
I am not a spec nerd. I just get one every few years when the battery stops charging. If at the end of the day,
love when people are like, oh yeah, I need to upgrade to this latest version. You should see the camera on this thing. And like, sure, pixels, whatever, they're amazing. But I look at one picture versus the next. I'm like, is this worth the $2,000 you're paying for a new iPhone or whatever?
And where do you look at that picture? On your phone?
Yeah.
It's not like you actually do anything with the pictures that we take.
Professionally, yeah.
When was the last time you printed out a picture and said, ooh, I really like the resolution on this? Right?
I don't think I ever have.
Yeah. Oh, you haven't? I have. I definitely have.
Not from my iPhone. I guess maybe
from your digital camera.
Oh, I don't have one of those.
No, nobody has.
My kids have like 4 of them.
Digital
and I
cameras?
don't have one. Yeah.
Oh,
it's
like, okay.
No.
Like a kid's digital camera, not some old one that you used to have?
Yeah.
Okay. That's
a
real
kid's one, yeah.
No? I'll get my dog one.
Bernie.
Yeah. So listen, going back to the Federal Reserve, right? They came out, they had a short statement, like I said, very short. They didn't raise rates, but there were a few dissents. So essentially there were 3 Fed governors that said they wanted to raise rates 25 basis points today. 9 governors voted not to raise rates. And here we are. So that internal dissent is relatively uncommon in the Federal Reserve. There was some speculation that they might raise rates today. And I think Bloomberg was reporting that there was like a 30% chance they would raise rates. Well, they didn't. And it doesn't look like they're going to. Me, in my conspiratorial mind, I thought to myself, well, Walsh is going to raise by 25. So he can say, okay, now we're going to lower by 50, in a few months.
When he causes a market meltdown. Yeah.
So that didn't happen. But yeah, I mean, I said this last time. I think he's setting the intellectual groundwork to lower rates. Conducting these committees,
convincing someone he's not a lapdog, and then lowering rates later. I don't know. I'm not convinced. I think truly he stood on business that he didn't like inflation and everything like that way back in the day. And he only changed when there was a spot opening up. So I'm a conspiracy theorist in that thing. I think he was trying to dupe the president just to get the seat. He was running like a politician himself.
Why would you want to be in that position, though? I mean,
because you're the most protected person in government.
But why would
He's the most protected person in government.
Why would you want that position to begin with if you already have all the money in the world?
Yeah.
Isn't he a billionaire?
His wife is. So I guess there's definitely a prenup in there, but he's a billionaire.
So what does it matter? I don't know. He's not going out and looking at egg prices, right?
Right.
Yeah, I don't think so.
I doubt he shops himself.
I think everybody should go shopping themselves to see what the actual prices are.
Maybe. I don't know. I just thought of something there. Going backwards when we were talking about Google and how they got hit on their CapEx. And then Larry Page, their founder, and comes out and co-founder says, I would rather go bankrupt than lose the AI race. That's how important it is. I'm just like, no, that's not what the people want to hear. And then Sanjay's in there just like trying to be the CEO. And he's just like, well, market didn't like this reaction. Why do you have to come out with that headline? Why'd you do that? I just think it's gasoline on a fire. Why do you have to say that? And I don't know. I think the whole AI trade and the hyperscalers and, well, I guess more so the semiconductor and memory names, I think the market's not only acknowledging that they went parabolic and need to be come back to earth a little bit, bring some gravity back in, even though the fundamentals are great. And we were talking about this earlier. The forward PEs on those memory stocks are so low. They are so cheap. But I think the market is saying, we don't think you're capable of actually getting the earnings in that equation. And
why are these hyperscalers going to stop buying memory?
I think it's like a DeepSeek 2.0. We got that Kimi 3 version.
The Chinese model.
Yeah, the Chinese model from Moonshot, where they say it was like 30% less costs. I think that's combining electricity and chips and memory. 30% less than the other, frontier models out there. And they were right on our butt. Came up out of nowhere pretty quick. And I think allocators are fearing a DeepSeek moment where suddenly they say, oh, well, not only do I need 30%, I need 50% less memory or 50% less chips because our algorithm and our training is more effective. Our neural networks are stronger and better, and they don't need nearly as much. I think maybe it's some short-term repricing on that fear.
So our markets are highly efficient. They priced in this massive purchasing of memory chips currently and anticipated that for the next year or so, but now we're pricing in the possibility of not necessarily keeping up with those expected earnings in the future because there's much more competition.
Right. So we were talking earlier, I think if you look on a forward basis, valuations are cheap. They're not unreasonable. I don't think this is a valuation bubble that people are fearing, and whether the average person out there knows or not, it's not a valuation bubble. I think what they're fearing is an earnings bubble, meaning they don't think those earnings can keep growing at the pace. So we're going to see at least going sideways on earnings, but we're not going to see the continued explosive growth that we've seen. and are being priced in the guidance.
Yeah.
Which,
Well,
or being priced out, I guess you could say.
When you think about the law of large numbers, I mean, it is really tough to continue to grow at 30, 40, 50% indefinitely. It's almost impossible to.
Mhm.
It can't really happen. You have these big cycles, especially in memory. I was around for I don't know if it's the first big cycle, but in the early 90s, Micron has been around a long, long time. They were selling, RAM at Staples and Office Depot. Everybody was flocking to it, and that was a big cycle in the beginning. And we've gone in and out of these memory cycles, and we're in one of them right now.
So when you worked at Staples, were people coming in and buying like blocks of RAM, and
Absolutely.
you would say, really?
Oh yeah, and it was extremely expensive.
I believe it.
I mean, it's
a terabyte back in the day was probably like $500, and now it's like 10 cents.
I don't know about a terabyte of RAM. We used to sell terabyte RAIDs, right, which is hard drive, random access interface device, these big backups, and they were like, not that we sold them at the store, but they did sell them, upwards of like $1 million for a terabyte back in the 90s.
And now that's like a disk drive. It's like
now it's like
it's disposable.
$400.
Yeah.
Yeah. So I mean, everything goes through cycles, and we are in a heavy demand for memory and compute power, right? I mean, there's no question about that. It's just I don't know how long it can last. I'm not knocking it. We're going to continue to need it, and we'll probably need more of it. It's just I'm not sure that the earnings are going to be able to continue with those massive numbers indefinitely.
Well, if you have those gains and it's not a qualified account, hey, you have some options on that 40% drawdown list that you could rotate some of those massive appreciators.
Yeah, but remember, I didn't come up with this, but the bottom of your screen is not support. Okay,
that's true. That's true.
I went through some of this in the .com bubble. If you liked it at 300 and now it's at 150, it doesn't mean it's a good buy.
Yeah.
It means it fell by 50%.
Wait, do your goodbye skit.
Goodbye wife, goodbye house, goodbye car.
It's a goodbye.
Yeah, it's a goodbye. No, we don't want to do any of that. But there are, to your point though, there are going to be some great opportunities for companies that get sold off, throwing the baby out with the bathwater, all of that stuff. Great opportunities. And most of these companies that we've seen here, especially some of the names that you mentioned earlier, they're not going to disappear.
Yeah.
I mean, Oracle is one of these companies that has a lot of debt. They've gone cash-free negative, and free cash flow free negative. And I don't think they're going to go away.
Oh, I don't think so either.
But I don't know that it's a good buy at these prices. It can still go down.
Yeah.
It can surprise you how far things fall when they fall out of favor.
Yeah.
And people are just unloading them.
I mean, you have the NASDAQ 100, which is down about 20% right now. So that's bear market, right?
From its high.
Yeah. But, definitely down there. Now, that doesn't mean panic, get out, run. Like, this is also one of those scenarios where if you missed out on it before, you have a chance to rebalance into it. It was 1 year, 3 months ago when NVIDIA was trading down at 88. And now it's up around, today it might be 195. 195. It comes back quick as well. So don't get scared off by some volatility in these high growth names. Going on that valuation things. Not all semis are made equally. Semis are a subsector in tech, obviously. You have the Broadcoms, you have the NVIDIAs of the world, and then you do have like the SK Hynix, the Microns, SanDisks, or the memory side of semiconductors. So they're not made equally. But semis right now aren't expensive. There's 7 regular S&P sectors that are more expensive than it. So it might be a scenario where, NVIDIA and Broadcom, they haven't been going to the moon like SanDisk and SK Hynix and Samsung, etc. Maybe it's a time you allocate a little more to them. Maybe not. Maybe this is just a time where you look for growth outside of tech altogether. But you have some options to move your money around if you're in one of those names that has come well off the top. Because like SanDisk moves, Micron, and all these names coming down 50% in 1 month is tough for a lot of people to handle.
There's no question about it. And, for the really, since 2012, 2013, buy the dip has just continued to work. I don't care if the dip was COVID or if it was 2022 or 2018, buy the dip has continued to work. At some point, long term, buy the dip always works, right? If you look at it 100 years, long term, buying the dip always works, not necessarily on an individual name.
Stock level, yeah. Index level, it does.
Index
That's an important thing. Like people say stocks will always come back. Individual stocks don't necessarily always come back.
Just ask the people that bought Lucent at 50, 40, 20, 10, and then it evaporated into something else. Never came back. Lots of .com names, we all know that, never came back. So buying the dip on the index, I think, always works over a longer period of time. I'm not saying any of those names that you mentioned are going to disappear. I think they're all going to be around, but it doesn't mean that they have to be higher in 5 years from now than they are today. So when you're thinking about what to do out there, to your point about buying some growth names outside of technology, I think that's where the market is currently headed. Maybe let this like bubble a little bit. And we're in this phase of consolidation over the last 2 months or so. I mean, realistically, since the Iran conflict has started, we've made a new high, but we're kind of still stuck in these levels and we're kind of just grinding. I don't think that's bad.
Yeah.
If we continue to make new highs, then we have these valuation pressures and the forward P is way too high. Let's let these earnings catch up.
Yeah.
Right. And if we end the year up 10 in the market, that would be a positive for me, because there is this rotation, not necessarily out of technology, but there's the selling of these semis. Nvidia is still close to 200, $195 today. Probably end the year at that same level, right? If I had to guess, it might go down, it might come back up, but 195 is where it is today, and I don't know that it's going to move too much. But there is a noticeable shift, to your point about the Qs being down 20%, and when you look at where the overall market is, only down 3 or 3.5% from all-time highs, if you hadn't mentioned those big drawdowns, or if you do mention those big drawdowns, you might think, well, the rest of the market has got to be down dramatically, but it's not.
Yeah.
And in fact, the equal weight S&P 500 is up about 14% for the year, beating the S&P 500, the cap weighted index, by like 6%. So we'll see how that ends. But yeah, I mean, the few things that are out there now in terms of the narratives, we have Iran, we have interest rates, we have this AI spend that we've been talking about right now, and oil seems to be the big inflation number, right? It moves around pretty dramatically. It's been as high as 122 earlier this year. I think it got down under 70 a few weeks ago, and now we're back up to 87 on Brent crude, and that's going to show up on the inflation, and certainly for July's inflation number, it will show up.
Yeah, I think that's obviously super important to spin a web of how you can explain what's happening right now. You have risk off sentiment coming from Iran and oil shooting up, which also pushes up yields because, that has to account for inflation. And that's hurting consumers out there. People trying to go out and buy a house. You can't buy a house. Well, you can, but it sucks to buy a house at 7% interest rate versus, 4 or 5.
Sure.
And then you add in consumer sentiment negative from past inflation already. You have the echo chambers on social media. You have, people being told they're going to lose their jobs due to AI, which, you see different layoff numbers, and they're not bad right now. Initial claims, continuing claims are not out of control by any means, but the headlines still have the impact behaviorally on investors. So you see every day the CapEx numbers. It's like, holy cow, they're spending $205 billion on CapEx. How is this sustainable? So you have people saying, holy cow, we're still within 3% of all-time highs. CapEx is unsustainable. Circular financing, all these things, I think, lend the average investor to say, I don't want any part of this. Let me kind of step back from some of this. And I think that's where you get, and then you also have the counter stuff we kind of talked about, where it's like the July rebounds to start Q3. You always sort of have a little bit of a sell the winners scenario and sort of buy the laggards a little bit, however long it lasts. But all those things put together, and it makes sense that you're going to see those huge winners and the hyperscalers and growth guys who are doing the CapEx sort of get hit a little bit. And that's where you're seeing it. Hopefully we get this Iran thing figured out. We get yields coming back down, because if we could get looser conditions, conditions aren't that tight, if you look at the equations, but interest rates are high, which makes people feel bad.
Yeah. I thought we had won the Iran war.
Oh, we went like 10 times already.
Okay. I'm not going to go down that path.
Hey, we're 2-0 on leaders being eliminated. Kind of eliminated, I guess. I don't know. We haven't really seen.
Well, so no, what's happened now in the last week or so, 2 weeks or so, we have been bombing the heck out of Iran. I think they did 13 straight nights of bombing, and then paused. And depending on your information source, we either paused to allow for continued negotiation, or we paused because we were running out of ammunition.
That's the thing. And I also think, in terms of what I look at in news sources, is we stopped the day after they struck the Saudi Arabian tankers in the Red Sea from the Houthi rebels in Yemen. So that's like they're pulling their proxies into action, which we want to nip that in the bud if we can. And I think that was also part of, yes, we're having a drawdown most likely on a stockpile. But in addition, like, oh man, if they're going to mess things up in the Red Sea as well, we don't want to see where oil goes in that scenario. So we stopped, and hopefully
likely higher.
Hopefully things cool down.
It does. I mean, it could happen at any time, but it doesn't seem at the moment that the forces inside Iran want to make it easy. I think they're looking. I mean, I don't know if they're calculating this politically for midterms. I don't. That would be. It would be interesting if they were doing that at a loss of life.
I think the IRGC, the hardliners, are in control right now, and they don't care politically. They don't feel threatened by an uprising because they have the guns.
But don't they feel threatened by getting blown up? I mean, that would be my concern.
Don't stick your head up.
So they're all just living underground?
Yeah.
That would stink.
Yeah.
Yeah, I don't like that.
Hey, I'm watching The Agency on Paramount again. It's a good show. Michael Fassbender. I think he's great. It's a great show. And one of the storylines in there is they have a source in Iran trying to figure out where they're going to do a nuclear stockpile and things like that.
Well, that's one of the things that they're talking about, right? I mean, the president has said that the number
Pickaxe
one
Mountain.
goal.
Did you see that?
Yeah, Pickaxe
We can't
Mountain.
really hit it, or our intelligence reports.
I didn't see that we couldn't hit it. I thought we were going to try. We have those bunker busters. But the president has stated time and time again that the biggest concern that he has is eliminating the nuclear stockpile from Iran, enriched plutonium and their potential to make more of it. That seemed, I don't want to say like a bridge too far, but I don't think they want to give that up. And that's the stated reason that we have been doing what we're doing. Right. So all this other stuff, this extraneous stuff, this tertiary stuff with the oil, that's kind of like side view mirrors. We should be going in there.
That's what's really affecting us, but it's side mirrors on the objectives.
Right. Why don't we just go in, get 1 million of our troops, go in, grab the plutonium, and we'll be out in like 20 minutes.
Why not?
No?
That easy, huh?
Well, listen, the Red Sea, I don't know what the percentage of oil that goes through the Red Sea, but I think, you could have a significant spike if that becomes a real problematic area, more so than it has been. Now you have, I think, Saudi Arabia that's actually bombing Iran as well. So this could get messier. I don't know that it's going to, but, there are people betting out there that oil is going to be significantly higher in the short term. God knows where it's going to be at the end of the year, but I would think that it could certainly go higher. At the same time, the president has shown that there's a possibility for diplomatic agreements, and you could come out at any time and have him say, or have them say, hey, we came to a resolution. The sticking point for them is going to be the plutonium and who has control of the Strait of Hormuz. They don't want to give that up. Mm-hmm. We want it to be free and open. And they're like, no, that's not going to happen. So I don't know how long this is going to go. What I started saying in the beginning in March was it really is the length and level, right? How long this goes and at what price oil is averaging. Gas prices are, locally here at 440, 450, depending on where you go. I know they're a little bit cheaper in the South where there's less taxes, but that definitely makes an impact on spending. Having said that, the U.S. economy is doing reasonably well when you look at the data. You mentioned jobs. New jobless claims are actually down to some of the lowest levels that we've seen. The 4-week moving average, which is just a longer calculation because of the volatility in the weekly numbers, is about 207,000 at the moment. So the average for 4 weeks is a little over 200,000. I mean, the lowest 4-week moving average that we've seen has been like 182,000. We're just above it. There is not this massive layoff occurring, although looking at some of the data that came out when we had the last jobs report, the labor force participation rate has been steadily declining, right? So the labor force participation rate is really how many working age people are there out there, divided by the number of people that are actually working. So when you include everybody that is not in an institution, not in the military, able to work, I think there's about 275 million people. And then if you divide that by the number of people that are actually employed and people that are looking for work, I think the number is around 175 million. You do that math, it comes up to about 61%. That by itself isn't good or bad. Looking at it over time, though, we were at a participation rate of around 67.5% back in March of 2000. And we've been steadily declining. Now, last time we were on here, we were talking about Social Security. This plays right into that. With this declining labor force participation rate, you continually have less workers supporting people that are on Social Security.
Yeah, you don't want that ratio, your stock to look like this ratio here.
Yeah, absolutely. You had done some math a few years ago, and the data stated that when Social Security was started, that there was about 20 workers for paying into Social Security for every
one beneficiary. What are we at now, Noah?
Well, in 1960, it was around 6. Today, it's about 2.7 workers for every one person collecting benefits.
People are living too long. We need a good pandemic.
Didn't we just have one? I thought that was the point of that. Speaking of the pandemic, did you see Dr. Fauci today?
Here we go. Yeah. Pleaded the fifth 111 times, apparently. Question.
He was advised by his attorney to do that. He didn't answer what color his tie was or anything. He's not having it. He's not having it.
You're trying to get me charged up.
No, I wouldn't do that. So back to the participation rate. It is coming down, and that is not helping the whole Social Security conundrum. And I don't see anything in sight that is going to prevent that from going lower. We need artificial intelligence to create more jobs, not lessen them. And maybe we should keep the population, to your point about keeping the population from growing. Is that a thing?
Goes back to that Bill Gates TED Talk. Did you ever see that? Where he's like, if we do a really good job with vaccinations and a really good job of this and that, he's like, we can get the population down 10%. We're like, what? Down? What? It's not the intention.
That would be a lot of that would be a lot of people. 10% of the population. I think we're at 340 million people. Yeah, something like that. So going back to the economy, we didn't have that much economic news. We had some retail sales numbers that came in pretty good. When you strip out gas stations, spending increased 7.7% month over month. It's not bad, right? People are spending money. We had some new home sales, annually adjusted, I think 1.6%. Now, a lot of that had to do with multifamily housing. It's not the worst thing in the world. Multifamily housing doesn't necessarily create the economic benefits that single family housing creates, as a new homeowner does. But it's not the worst thing in the world. And, jobs are still there. We had 57,000, 58,000 this month. So the economy is humming along and consumers are very resilient. So until that changes, which certainly could. Till that changes, we're in this upward trajectory in the overall economic conditions. I don't see any problem with that.
No.
So labor market refuses to crack.
Hey, we talked last time about emerging markets exposure to tech earnings and the growth rate for this year. Obviously, we've seen what's happened in South Korea and SPEM getting hit, emerging markets index getting hit this month in July after everything Iran ratcheted back up. But we told you that the stocks 600 only had 6% earnings growth exposure to
which
tech,
is the European index.
And that's doing much better right now. So I don't know. Maybe we had a well-timed comment there.
Well, to your point about EM, South Korea was up earlier in the year like 100%, mostly driven by two big semiconductors. And they've fallen dramatically over the last month or so. So you're seeing emerging markets kind of get hit. I don't know. We talk about regulations regularly on here. The European Union has a lot of regulations. It's one of the reasons that they are not the leaders in technology in some of the areas that the United States is certainly far ahead of them. And maybe if there is this rotation that continues on, Europe might be the allocator's choice because of the limited lack of technology over there and more of a value tilt overall.
Yeah. I think that would be
you heard it here
the
first.
Prudent decision for people who want to take risk off, for sure.
Absolutely. So we have some earnings that are coming out later today after the bell. We don't have we don't have a vision into the future, but we did see Google came out and Tesla came out. Tesla was saying they were going to spend an enormous amount of money. Earnings forecasts
got crushed.
Got crushed, right? Yeah. And then Google came out. They said they were going to spend $200 billion on CapEx. I mentioned that earlier. And then the rest of the Mag 7 is coming out in the next few days. So that'll be a pretty big tell. I imagine they're all going to say something similar, right? There could be some differences between them, but they're all going to say, hey, we're spending a lot of money on chips. We're spending a lot of money on compute. And,
hopefully they make the case very clear of why they're doing it, how it's paying off and starting to pay off.
Well, that payoff, right, is the juice worth the squeeze.
Yeah.
Yeah. And with some of those earnings reports and certainly forward guidance, which the Fed no longer gives, you're going to really see those chip companies respond to those earnings. And one way or the other, right? Up or down. I mentioned Tesla, SpaceX. Right. We've talked about SpaceX on here a few times. Obviously, it came public a few weeks ago. It's been a stinker.
It's come back to Earth.
It has come back to Earth. Yes.
I was hearing Ron Barron talk about it, and he got in early on several of Elon Musk's ventures, and he just loves Elon. Obviously, if you make someone billions of dollars of wealth, you'd like them too. But one of his largest positions is SpaceX and Tesla, for the record. And I'm sure he's a pro, so he probably is less bothered than we would think, but they're definitely getting hit over the last month.
Absolutely. Yeah. Just something about Elon kind of rubs me the wrong way. I'm sure he's a great guy, but
are you hating on his Asperger's? Are you hating on a handicapped man?
Oh, you think he's handicapped?
He has Asperger's. Yeah. That counts. It's diagnosed.
He said in a interview last week that he thought maybe he had gone too far with Doge. How's that all working out? Yeah, okay.
And I think a lot of the hate came on how he wanted to just axe and cut everything. Maybe it would have been more beneficial to say, going forward, we're going to fix these contracts and fix, how the monies are given out, rather than just cutting people, cutting departments, cutting programs, saying going forward, we're going to have a framework for efficiently used capital, because the government doesn't do anything efficient. If he could have somehow applied what he's done at Tesla or SpaceX, which you have to admit, regardless of the stock, what he's done with SpaceX, making things reusable, what he's done with the contracts he's negotiated has been extremely successful, extremely efficient. if he could have somehow put those things in place for going forward, a framework that would be tough to break, start some good habits, that probably would have been more productive and drawn less ire. Just less ire, not avoided ire.
So making the government more efficient.
People don't like that generally.
Okay. I don't know if they like it or not. To your point, I think it could have been done maybe a little bit.
He doesn't have a good bedside manner. Give him a break.
I would hate for him to be my doctor. Yes. He would chainsaw my thyroid out, and that would be the end of it. And, so anyway, as we wrap up here, we had a death that maybe people locally or people on the East Coast would know. Richard Wood, one of the co-founders and former CEO of Wawa, the convenience store, died. Are you a Wawa guy?
I love Wawa.
Yeah. So here on the East Coast, Wawa and Sheetz, and maybe that's a Pennsylvania thing, but Wawa is expanding up and down the East Coast. He passed away. He was credited from taking Wawa from like a regional dairy to this massive, I'd say local dairy.
You said dairy. Wow. Why do you name it Wawa then?
I don't know.
Isn't Wawa mean water? Am I making the wrong assumption? I just thought Wawa meant water.
I have no idea what it means. I know it means sandwich to me.
Oh, yeah. Nice little sub.
What's that turkey thing they do over Thanksgiving? The Wawa.
No, that's
gobbler?
Arby's.
No,
well, maybe
not.
they do too. Arby's does a gobbler.
Do
the
they?
deep fried gobbler. Yeah.
Okay. And then the only other thing that I had on here was the turtle still MIA. Mitch McConnell. He's gone like 6 weeks.
Andy Beshear, the governor of Kentucky, is like, you need to prove that you are like capable of being a sitting senator. Yeah, basically.
Is he alive?
He's alive, but I think he's full turtle. I think he's like.
Well, he's actually, he already announced he wasn't running.
Yeah.
Right. So, I mean, he's not worried about campaigning. He's not worried about, getting out there and getting the votes or anything. But I guess, it's going to be difficult for his party without him if he's not there to vote on some key things that they want to get done. And it brings up the point of, should there be rules in place about health disclosures when stuff like this happens? I don't know. Well, I guess we'll see how long he is out for.
Yeah.
Hiding in his shell.
This is why we shouldn't have career politicians.
That's a whole nother episode. All right. Anything on the way out here?
Nope. Hopefully we can just get through this volatility a little bit. Get some resolution, some less missiles and bombs going off, get some yields to come in a little bit.
Yeah.
Say it over and over, but sticking with it.
Absolutely. Absolutely. I will just say, don't stop the compounding. And as Mr. Buffett says, don't bet against America. Thanks everybody for listening. We'll see you next time on the Market Enthusiast.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.